Have you ever noticed how every IPO looks extremely good until it's not? From Paytm to Zomato, investors rushed in to put in money in IPOs, and equally quickly after listing, when the prices fell, they rushed out of it. So, a lot of investors ask, should you even invest in IPOs? And do I invest in IPOs? Short answer is no, and I'll discuss why. But for those of you who don't know me, I'm a SEBI registered financial advisor, but before I became a SEBI registered financial advisor, I spent a lot of my time writing offer documents for companies that were coming up with IPOs. So I'm a capital markets attorney. I did my law school from New York University. I'm admitted as a lawyer in New York, and for most part, my job was to write offer documents to explain in the most simple way. So you keep hearing, please read the risk factors carefully before investing, which are the first 30-40 pages in the RHP or DRHP, the red herring prospectus or draft red herring prospectus. My job was to write those risk factors. So I spent a lot of my life writing those risk factors, and I can tell you one thing: if there's something I do not want you to know, you will not know it, because I've been trained to write the offer document in a way that I have to disclose in such a way that it benefits the company. So let me discuss 4 reasons why I stay away from IPOs, and while I discuss these reasons, I'll actually take the examples of a few of the IPOs which came up. A few of those where I liked the businesses, did not like the valuation, so I did not buy the IPO, but I bought the stock after the IPO, and I've spoken about it in my last video, a link to which is here. This is the video, you can actually have a look at it. I'll also talk about some of the IPOs where I did not like the business, I did not like the valuation, so I didn't buy. Let me first tell you, the biggest reason why I don't like the IPO market is because when an IPO comes, the market is so conditioned for that IPO. This is a time when records and accounts of the company from the past are not public, and this is the first time they're audited, all right, but this is the first time they'd be audited, put out in a way where, the whole market will read it. Fund managers would probably scrutinize it, question the company in every investor meet. So, it takes 4 to 5 quarters for everything to come out and, be answered by the company. Remember, before the IPO, the company spends 2-3 hours preparing for the IPO. So a lot of what they do with their accounts and with their records, I'm not saying it's fabricated. There's a difference between fabrication and making it look good in the best way possible, which is, legally permissible. A perfect example, Lenskart is coming out with an IPO. Now, I really don't know why a company, they make glasses, 70,000 crore market capitalization at the current price band. If it does its IPO at the upper band of 402 rupees a share, then that's 70,000 crore of market capitalization for a loss-making company. This is the only year last year where they've turned profitable, and that too is on account of one huge 167 crore one-off other income. Otherwise, if you minus that, they've been loss-making the year before, and just this year suddenly they've become profitable, and they're listing it at a market cap of 70,000 crore if everything goes well. I can assure you this company will not be able to sustain this. Let's compare this, and first of all, have a look at these investment banks who are on the issue, and these are the guys who are bringing this issue to the market. Somebody has to question what they were thinking when they came up with this price band or whatever growth they're factoring in future. So I'm clearly, by now I don't have to say it again, I'm clearly giving it a miss. But let's compare this IPO with Eternal, which was again a very expensive IPO. The price band was about 67 rupees. It got listed at 115. To be honest, I missed it. I purchased it at 50-54. I sold it at a very, very low price of about 98-99, and then the stock just ran away. Having said that, I'll admit my mistake, and I now see that for Zomato, a company which I liked because the business was very scalable, and it is still very scalable. I don't like it, as I spoke about it in my last video. For the valuations to be justified at which the stock is trading now, the profit has to be 4,300% higher than what the profit is right now. So you know, I do see that the growth potential is immense. For starters, Zomato can have a major impact on the rankings of hotels and restaurants from where they do food deliveries. They can pretty much decide which hotels get maximum orders because they can play around with their algorithm. More than that, think about it in future for Blinkit. They are faster at delivery even than Amazon in India with their dark stores. Zomato, the scale at which it's expanding, could tomorrow have its own burgers, so they can get into a product line of its own, Zomato burgers, Zomato Chinese and stuff. So, there is a scope for massive expansion. I don't see that happening in Lenskart. How many different colors and shades of lenses can you make? So, for this company to even aim at a 70,000 crore market cap makes absolutely no sense. So, the way accounts are written would probably be different how they are when the company comes out with an IPO and how they proceed in the next 4 to 6 to 8 quarters going forward. You would not see even the top line expand the way it has for Zomato, let alone the bottom line. Bottom line could be that, we're trying to drive the valuations up, and once it becomes profitable, we'll probably be the market ourselves. We'll create the market. That's not going to be the case. So I just thought I'll compare the two. Zomato as a stock I really like. Extremely expensive, so not buying it. Lenskart, even as a stock or business or valuation, there's nothing about the stock that I like. So, second is, invariably in a bull market when IPOs come, you will see that better opportunities will exist after listing, maybe a year or 2 years after listing. I was reading an article, I think 60% or 55 to 60% of IPOs which happened in the last 2-3 years are all trading below their listing price, and even below the upper band of the price band at which they were listing. So what really happens is that with the advent of technology and all these payment apps and banking apps, it's so easy to apply into IPOs. You can do ASBA, which is application secured blocked amounts, money stays in your bank, and everybody thinks that this IPO will be super oversubscribed, and you'll get some allocation and then you'll sell at some profit. So it's become more of a demand and supply game where, the number of shares are limited in quantity and the demand is pushed through a lot of sales effort, a lot of, as I said, apps and banking apps and Paytm and all sorts of places from where you can bid, even paper forms and your brokerage accounts. So a lot of people are just applying for these IPOs because think of it as a lottery ticket, irrespective of the valuations at which it's trading. So again, I'll give you 2 examples here of IPOs which where the businesses I really liked. I wanted to buy into that, but the IPOs happened at insane kind of price, and it went up further. First, which I remember, a stock which I hold today is Tata Technologies. Again, I've done a whole video on that. I'll give a link to an article which I published 3 or 4 days before the IPO was to be launched. I think the IPO price band was fair, but the IPO opened at almost 60-70% premium. It went up to 1,200 rupees and people were buying it at that time. Today, that same Tata Technology share is trading at 670, 675. No one's buying it. I bought it, from a price to earnings multiple of 80 back then when everyone was buying it. Today, it's trading at 40. And nobody wants to buy it. So that was, one stock which I really liked. I didn't buy it in the IPO because there was a frenzy. The other was actually Paytm itself, which was overvalued, still remains overvalued. But, again, the business growth potential is immense. So 2,100 was a crazy price. I bought it at 1,200. It fell down to around 600, 500, thereabouts. So around 550, 600, I bought more of it. So I'm holding it at around 922 the price, but I'm holding it purely because I think exciting things will happen in this company going forward. So mostly you'll see Paytm is a perfect example that IPOs, when they're launched, if the brand is really popular, if it's very visible, like Paytm, it's visible everywhere. Lenskart, it's visible everywhere. So everybody wants to buy it, not knowing the price that they're paying for that stock. You're paying 10,000 rupees for a new Nike shoes, that's fine. If you're paying 1 lakh rupees for the same shoe, it's a stupid idea. The shoe is the same. It's a great shoe, but you're paying too much for it. So that's the second reason why, I don't invest in IPOs for most part. So third reason why I don't invest in IPOs is, for most part, you will see that the valuations will not just be stretched, as I spoke about in the first part. I spoke about Lenskart, which is coming out with an IPO market cap of 70,000 crore is what they're targeting. I was looking at some banking stocks recently to, look at smaller mid-tier bank stocks to buy because of, so much FII money coming into India. So 70,000 crore would be bigger or larger than the market capitalization of Yes Bank, IDFC First Bank. So how can a company, sunglasses, lenses, bigger than a bank? So it makes no sense at all to me. Frankly, that's not the only reason. The other reason is, and this is a big one, whenever a company is doing an IPO and the purpose or the reason for the IPO is offer for sale portion, like giving an exit to the existing shareholders, especially private equity guys, and very little money being, raised for expansion, that's a sign that, it's just earlier investors or private equity guys who now want an exit. They're the ones paying the investment bankers, they're the ones paying lawyers like us, they're the ones paying chartered accountants and auditors. So the whole deal team is being paid by the company. Naturally, the entire IPO document, sales effort, everything would be skewed in favor of the company because they want to give an exit to the private equity guys and the initial investors. So as one of the things that I look at, and this may well be a point of where I do consider investing in IPOs. So if I see that there's no offer for sale, and if there's only fresh issue and capital being raised for genuine expansion plans, there's a chapter in the RHP or DRHP which is called objects of the issue. So if you go there, you'll see exactly what the company plans to do with the money that they raise. And, there's a committee which looks at that for the next 6 months, or in fact, now I think the time has been extended for a long time to see if the company is actually using the money for that. But, if you look at the objects of the issue and figure out why the company is raising the money and what they need it for, if it's a very genuine case of expansion, which you'll get to know if they're setting up a new plant or a new factory or something which is very capital intensive, that's when I'm more inclined to read further. And the second thing I look at is if the valuations are justified. And the easiest way to do this is, compare the valuations with the peer group. So if the company is doing an IPO, I'll give you an example, Tata Capital. Another IPO which I just bought after the company got listed, but it went nowhere. It listed at 328, 326. It's trading at 330. I purchased it. I've done a whole video on that. This was trading in the grey market at 1,000, 1,100 at price to earnings multiple of 90. Now, why I bought it is because the company is going to bring in a lot of new businesses in Tata Capital. It's an upper layer NBFC. They've put in a few businesses which were not there earlier. Again, there's a whole video. If you want to see my reasons for doing that, you can. But the short point here is, when the valuations are in line or cheaper than the current set, which you will see. So this is, if you see this chart, this is the peer group for Tata Capital, and this is what the valuations are right now. So I purchased this stock after the company came out with its IPO. I knew that, it was trading at an extreme valuation before its IPO. Made no sense at those valuations, but it's a great company, great business, so I bought it. So yes, if you see that there's genuine need for capital, need for expansion, which you'll get in objects of the issue, if you also at the same time feel the valuations are justified, the company is doing an IPO at a good price compared to its peer group, compared to other listed players, definitely it's a IPO worth looking at. And finally, one more reason why I usually don't bid for IPOs is because, especially in bull markets like we have right now, I wait till the final day, and if I feel like it's not majorly oversubscribed and I like the company and I like the valuations and the reason for doing that IPO, that's when I bid for an IPO. I don't even remember the last time I bid for an IPO which I got an allocation to. There is always companies in the same sector which will be trading at cheaper valuations, better companies. To give you an example, a housing finance company came out with an IPO some time back, And there are 14 other housing finance companies listed in the market. 14. Some of them trading at price to earnings multiple of 4, 5, 6. These are, the likes of PNB Housing Finance, Repco Home Finance, Canfin Homes. So what's new about this new company which is coming out with an IPO, other than the fact that at that time they have a lot of marketing budget, so sales team will fill up newspapers. If you see, turn the papers, it's a full page ad which is supposed to be like a statutory disclosure under ICDR, which is issue of capital and disclosure requirements. SEBI mandates that disclosure to be given, but they're treated as advertisements. They're pasted on front pages of newspapers and on a lot of these finance websites. So there's so much marketing effort being done around IPOs that people who don't even understand what the company does or the business or how it operates end up pushing that button and applying for that IPO. So if I see that kind of frenzy is not there, if there's not a lot of sales effort, not a lot of institutional buying into the company, it's a business that I understand. And again, reason number 3, the money is being raised for the right reason, the valuation justified. That's when I buy it. But otherwise, when I see too much effort being made on the sales, big anchor books, big people talking about it on TV, then obviously there are vested interests. Most likely, if you actually miss out on applying for all of them, like instead of, you may make money in one and lose money in the other 3. As a rule, don't apply in any of those and wait for these companies to get listed. Pick up the right ones on a longer term basis. For most part, after 5 IPOs that you missed out and purchased only 2 from the open market, you'll see you probably made more money than you would by, applying for 100 shares in an IPO and getting only 10. As I was talking about, I wait till the last day. The oversubscription figures are not too much. I may still consider, but for most part, the oversubscription figures are such that you know that you're not going to get it. Even if you get it, 10 shares for 100 shares that you've applied for makes no sense. So that's my view on IPOs. I apply in these very sparingly. As I said at the beginning, if there's something the company does not want you to know, you will not know about it. I used to joke about it with my banker friends when I used to write these offer documents that, my training as a lawyer has been to make sure that people don't know so much. And, I'm happy today. At least I'm educating people about how these documents are written. And I used to also joke about my days as, writing those documents. I used to tell a lot of my friends who were bankers that, everybody else has some job to do. Doctors are saving lives, police people are making the city secure. Today, as a financial advisor, I'd like you to invest with me. If not, at least I'm giving this information which is free for you. As bankers, I never understand, other than, especially investment bankers who are doing IPOs, other than propping up and down the prices, I really don't know what they do. They should ask themselves why some of these IPOs are priced at the price at which. But, you have to be careful before bidding for those. So that's my view on IPOs.